Hey, people, Reset Sniper. I haven't had one of these in a while. Um, we'll really appreciate if we share and grow this channel a bit more because it's a case of wherever we're getting the most traction is where we put the most effort. And the market sniper with the gold moves, also crypto having reverted bullish. Key level though, this 12K, we need to see what happens there. Those channels have rocked. Need to just get the shares up and the likes if you can help me. Anyway, it's always annoying when you have watch stuff on YouTube and everyone's saying the same thing. You know, shares and likes, shares and likes, no. But actually it does make a difference in terms of when I'm thinking where I want to put my effort and my time. So anyway, what am I going to talk to you about? Reset Sniper. Well, let's talk about something I did on the Market Sniper, which was around the Bureau of Labor stats and also the shadow stats, which is basically the old Bureau of Labor stats. Even I don't know if it was even called that back then, in the Reagan era of economics, Reaganomics as it was known, although it probably very little to do with it. But he was the president at the time, so he took the name. And that was the 1982 era of how we measured inflation. Now, shadow stats is not a man coming up with his own formula. It's just a man taking the formula that used to exist for government statistics a long time ago. And I essentially applied this to the gold price, and I showed that in actual fact, if you adjust at the Bureau of Labor stats as it is today, and if you adjust gold and silver by the current shadow stats since 1982, in other words, it forked from there. We stopped believing the government. Up to 1982, we believed them, and then we forked with the original stats of 82, not allowing all these adjustments that hide inflation. The fact of the matter is you have double digits inflation in America. And many people say all the time, are you inflationists? There is no inflation. Well, it's absolute nonsense. There is no truth in the reflection of the current statistics to indicate that there's inflation. That doesn't mean in reality there isn't inflation. And in fact, if you took a basket of your grocery slips from 5 years ago, all the things you were eating, providing you haven't had major dietary changes, and you took a basket of your grocery slips today, you'd find that the percentage that you're facing as inflation for your personal real inflation rate is more likely to emulate that of shadow stats, the 1982 Reagan stats, than that which the Bureau of Labor Statistics is giving you. So where am I going with this? Well, it's about the fact that key events are going to start unfolding, which you're going to see certain seas change, things starting to become predominantly clear. And the fact that this inflation has always existed and is hidden. I mean, you only have to look at the stock market as an asset bubble that has gone well above. A lot of that is as a result of inflation. That means, and here's where people are generally wrong, inflation is increases in money supply. Full stop. Change in prices is visible symptom of inflation. And changes in prices can be changes in prices in many things. So your investments and savings are hyperinflating. Apple stock went from being $500 billion to now knocking on the door of $2 trillion soon at 1.7. That's hyperinflation. They haven't done anything particularly new since. Each device is an incremental advancement on the other. The big innovator is largely dead. The procurement guy is in charge, but he's like a god. You know, under him, all this has happened. But then you look at Amazon, you look at other things. So how's this happened? So let's go back to 2007 and 8 and talk about why the official stats, which is, as I've already explained, a non-representative number in my view, is not that inflationary. And here's the reason why. When we had the quantitative easing after 2007 and 8 great financial crisis, what actually happened is there was two economies. There was Main Street, retail land, you and I, man in the street. And then there was the bankrupt banks and the financial and institutional sector. what happened is the globe, instead of being this one bubble that had air pushed into it in the form of QE, it was almost like the little clowns that do balloon characters, dogs and cats. They actually created a figure of 8 bubble with a pinch in the middle. And in fact, they didn't do it in the middle. Main Street was the big bubble on the one side, and the little bubble that they twisted and had, which were the institutions, got given all the air. And they got pumped up, back up, because they had huge holes in their balance sheets as a result of that, particularly the banking sector. They were provided a lot of capital that essentially they reshored up what they had done wrong. And the only people they lend to is megacorps, because SMEs are risky and they know the situation of the global economic environment. This is pre-COVID, we're talking 7 and 8. They know the man in the street is busted. So there's the poor bubble and there's the rich bubble. And they pumped their air into the rich bubble and made the rich bubble richer and blocked the holes of a broken banking system, lent to megacorps who bought their stock back, and you have hyperinflation in the stock market, and you have zero inflation on the official government stats, or very low inflation in retail street, because you ain't feeling so rich. 2009 was the peak point of misery. Everybody was moribund. The banks were bust. Many people lost jobs. There were no increases being paid. People were being laid off, etc., etc., etc. The big half of the mainstream half of the bubble, with on the right-hand side of the twist, let me talk right-hand side, real people, were having a horrible time. And the more they pumped QE, and they were applying this sort of trickle-down effect. It's kind of like, you know, these champagne socialists, read communists, that do a castle of champagne glasses. And there's a 9 billion glasses on the ground floor, and then there's a few million on the second floor, then there's 100,000 on the third floor, then there's 10,000 on the fourth floor, and then there's a couple of hundred on the fifth floor, 20 on the sixth, 5 and 1. And they show up with a couple of bottles of champagne. And they say, trickle down effect, chaps, trickle down effect. And they fill the very highest glass, single glass, and it starts to overflow. And the next level that has 10 glasses also gets filled. And then that bottle's done and they chuck it away. And then they say, oh, we need more QE. And they pour some more into the top glass, and it goes into the next level with 10 glasses. And then it fills a micron in the few hundred level below that. And then they say, oh, some more QE, and they pour another champagne, and so it goes. And the top layer is cup runneth over. The layer just below that is abundance, and the layer just below that gets a reasonable amount. So you're now talking about CEOs and senior management with share options in big megacorps. They're doing okay. And then the bottom 9 billion, not a single drop makes it down. Not a single drop makes it down. And they're applying this trickle-down effect, and they're reinflating the left bubble. And this was greatly criticized by Democrats and some Republicans. It doesn't matter who, they're both birds, wings of the same bird. And now what's happened this time that's different, that's going to make the inflation element properly kick on in a big way? Oh, let's have a look at the big blue sea. See that over my shoulder. It's so beautiful. Anyway, so the thing that's going to kick that back on is the fact that we're doing this furloughed worker payments. In other words, now, the central banks are almost bypassing the retail banks that just shored up, didn't lend to you unless you were taking a credit card at 16.9% APR or up to 30%, 29% APR, depending on your credit score. If you're a good lender, maybe credit card debt at 11%. Quite happy to lend to you at those rates, but you weren't getting overdrafts. They were lending to megacorps for next to nothing because they were being charged by the central bank if they sat on too much of the capital. So they preferred to lend it out, but they wanted to lend it out to places that they kind of felt wouldn't die. They're not going to lend it out to Joe Schmo's restaurant, little SME, to build an extension and seat a few 20 more bums on chairs. That's not where it's going. No siree. They're going to lend it out to IBM, failing megacorp, GE, etc., etc. and they're going to go buy back their stock, and you're going to get inflation, but you're going to get asset inflation. And this is the thing about inflation. People all just think inflation is purely to do with how much you're paying for your food and your groceries. Well, if the bubble is set, tied with knots in it, the air goes into certain pockets. And that's how it's worked. The pockets that have received the inflation is the stock market, which is why the Israelis were told in a Zero Hedge article, I think it was 3 or 4, 5 years ago, by Apple, because they knew that this is where the money would be going, and the Ashkenazis look after each other. Hence why it's happened. And maybe it's still a good bet for now. I just don't feel it's one I want to pursue. I'm more interested in the real money, which is gold and silver. And I think they won't be able to stop that one, and it'll get disorderly. Although when that happens, I think if it gets potentially able to move to the scale we will, I think they'll pull dirty tricks on us. So there's real risks on that. Kind of like my HYG puts, the Fed will just stand behind them, even though it's all made of defaulting garbage. And you end up with a high yield fund that has a de facto backer, which stands behind it. It's almost like a currency peg. You can buy the Euro Swiss at 1.2 all day long, and it'll go up to 1.21, and you can close your trade and wait for it to come back and buy until they walk, until it's no longer viable, and then you have a spiller, a thriller all the way from Manila, and it takes you downtown, deep downtown. So I'm more on the peg fail trade. I don't want to play the fraud Ponzi game. I don't ever want to lose money playing on a fraud. I'd rather lose money trading on honesty reasserting. I just can't bring myself to buy hyper overvalued stocks on any great scale. That doesn't mean they won't go up higher in this inflationary environment that I'm about to describe. So how's it different this time in this new ongoing recession? Because essentially we're in an L-shaped depression from 07, 08. We probably should have had an L-shaped one from 2000, but they inflated such a strong property bubble that many people got to reinflate themselves at a retail level during that period into 07, 08. But since 07, 08, we've been in a depression. Now the depression is reasserting. They never really cured anything. They just proliferated money, reinflated the city, and reinflated the asset markets. So people that say there's no inflation, point them to the stock market. What's happened is they've turned the tap off that sees your salary get inflated, that sees your work, etc., being inflated. You don't have any of those dynamics that inflates anything that's worth for you. Only your stock portfolio if you have one. Now, what's different is you've now got essentially government going direct to the citizens in America. So this is all in American context that I'm speaking. It's one of the most significant economies. We talk about the dollar. I've just released Brent Johnson and I's discussion. Not an interview, a chat. We talk equally amounts and we share because we've got a lot of similar thoughts. You can go watch it on the Market Sniper previewed today. But the point being, America is essential to this discussion. Now, what goes on in America is now that they are paying small, medium enterprise owners on revenue that they previously declared and paid tax on, furlonged money, according to a formula. So if you are running a small SME, you can still run that business. You may be even doing a fair amount of business at the moment, plus you get your furlonged payment provided to you by the government, and it's gone direct. So now they're pouring from the same height, but they've taken away all the layers of champagne glasses, and yours are all these many, in America's case, better part of 300 million of them are being poured from on high champagne, and instead of relying on trickle down, they are actually getting some juice in the game. So in actual fact, what's actually happening is you're making the same money and more, because you're still doing some trade. There's people coming in because they've also been given furloughed money. And when you give it to the man in the street, he's not an investor. Generally, he's a consumer, particularly in America. He's a consumer. So actually, you're seeing property prices going up on furloughed money because people, the one thing the banks will still lend on is property. You're seeing cars going up. And this is in an overproduction environment of cars. Second, there's a shortage because production was switched off for a large degree during the lockdown. So there's a temporary bottleneck in supply. Now you're having a spike in demand because you've got your normal small business returns, which probably not returned to quite what they were. But you've got on top of that, this full-blown furlong revenue, which might be anywhere between, I don't know the percentage and I don't know the formula, so I'll be guessing. But for example, my taxi driver friend in the UK is getting 80% of what he earned for sitting at home. He doesn't need to drive for the other 20%. He can do other things. He can sit at home and he can watch telly. That's not necessarily what he's doing, but I'm just saying he's got that amount and he's got free time and he's being paid. So he's existing and he can keep his costs down and he's existing. So people are being paid for sitting on their arse, and some of them are still operating as well and getting close to what they would have made through the government, plus whatever they do make in this L-shaped recovery bounce, where other people have now suddenly been given money. So you're getting a temporary spike as a result of furloughed cash, SME support cash, etc., etc. So the citizens are now being sent the money that is being created. So you're all being diluted. It continues to be inflationary. Better part of 3 to 5 trillion, somewhere in between. It's difficult to keep up over 3 months, which is more than anything was done for all QE policies throughout 07 through to 2014. So in that period, you failed to do the same amount as you've done in the near term. And now some of that money is getting to people. And what are they doing? They're not buying silver and gold. The ones you guys watching this channel may do with your furlong money that are in America or sitting in the UK getting 80% of your wages. The odd one might. But let me tell you what's happening. You're cheering yourself up because it's a shit old life and you're sitting at home and there's all this COVID uncertainty, there's a bit of fear and loathing. It's retail time. Retail therapy for COVID-19 depression. That's the game. So everyone gets into a little bit of retail therapy for COVID-19 depression, courtesy of the government, and you get a spike in sales and consumption. Now, here's what happens with that. It leads to a desire. At first, it creates you dependent on state because you stop working so hard because it's quite tough. A lot of these small business operators, they're opening limited hours. I'm looking at restaurants. Some of them aren't open certain days. They're waiting till demand is making them abnormal returns again like they used to, or at least normal returns like they used to if they were a functioning restaurant. So they have slightly less time. They make sure they're full on the days they are open. And they pinch how much they're offering as potential service, and they're getting government money, and they're actually making more money, and that leads to expenditure. Now that expenditure is in an environment where we've actually had at minimum 3 months of factory and plant lockdown, so where there's a shortage of demand, supply. So actually you're getting price rises, squeeze on supply because of the lockdown. Factories weren't making this. And I saw this personally. I wanted to buy an e-bike, a good one, and there's no 2020s available at all. And the 2021s are on back order, and they've only just started the factory, and the earliest they'll deliver a 2021 is in December, which is just about on the cusp of 2021, when normally the 2021 bikes are out the beginning of the end of the third quarter, even September, August, halfway through the third quarter for the next year. You're in a queue, you've got to pay a massive deposit, and you take a number and you stand in the line for your e-bike. That'll probably won't make it for Christmas, because if they tell you December, it's going to run late. And it's Specialized, it's YT, all these brands, no stock. Many of the ones you want, no stock. No stock. So lockdown has created a perverse blimp, which will sort itself out. But manufacturing, shortage of supply of like consumer items. I wouldn't say e-bike is everyday consumer item. I'm just giving you the example that I've experienced it with. And a current cash flush bounce. So that's going to cause more expenditure in the real economy. That's what you never got in 07, 08, except with big corps buying their own stock, and you got stock market inflation to ridiculous PE levels, which is why I can't find within myself to buy that, even though it may go higher. The perversion may continue further, particularly on your oligarchical, megacorps, satanic tech companies that are besmirching your privacy and want the end of cash and want every transaction that you do. That's why Apple will also be doing a credit card, because their card will look so cool, will probably pearlescent and amazing, and get you rewards and discounts on your apps that you buy in their store, and will give you special interest rates so that they can also be an tertiary lender with a credit book and have all your data on everything you spend, not just what you spend through iTunes and App Store. So anyway, that little sidebar and tangent that I like to go on every now and then with a mini rant aside, what's actually going to happen is the real inflation is going to be difficult to mask now, even on the bullshit deflated BLS stats that continues to reconfigure the shopping basket for the calculation of your CPI. As I've already said, and as I've already stated, go have a look what that deflator number is on the gold video. I have the spreadsheet in there. It took me a long time working and I had to buy in the data to do it, which is why I was a bit miffed when everyone crapped on me because the gold market went down. That was a 5-year macro potential. What is the inflation adjusted current cost of gold and silver in the current market? It was a long-term macro view. It was not a call to buy at that second. We in fact had already warned where the key targets were on gold euro and gold pound quite some time ago, and they'd just been run. But I needed a weekend to do that work, and I stayed up late and I did it. So hopefully you enjoy it. Go watch it. It was bloody useful, because you can see benchmark. I actually want to take the stock market. I want to deflate, and I'm working with some people for applying a shadow stats deflator to everything, so that we can have a basis of comparison. Your currency is not the benchmark for how rich you were. If you had $1 million net worth 10 years ago, you do not have $1 million. If you have that same $1 million net worth, in real dollar terms, you do not have $1 million net worth today. I think most of you understand that, but people still think and still say that's how many dollars I'm worth. You should be asking, how many Bitcoin and gold ounces and silver ounces do I own, and am I worth if I converted all my fiat to silver and gold ounces today? And as those silver and gold ounces get higher, you start to have a problem. You should be sitting less in the fiat and more in gold, silver ounces, and Ethereum tokens and Bitcoin tokens, etc. So you should have a benchmark that isn't the dollar, because we're about to get into the perverse major loss of value of all fiats, for which the dollar will actually get relative strength for a while, as per the dollar milkshake theory, which I still think is accurate. And as I say, we've go watch my chat with Brent. It premiered earlier. But the key thing here now is that all currencies are losing, particularly the emergings. If you're a South African in the Rand, if you're an Australian in the Aussie dollar, they've deflated away your currency to protect the banks, not you, for your housing bubble. I discussed this and made mention of this and said to Alex Saunders of Nugget News, and I said it 2 years ago about the property in Australia. They're going to kill your currency, and boy have they done a good job. You're not even in what would be described as an emerging, you're a commodity currency that's higher up than an emerging currency, and you've done the South African Rand thing. And look at your gold price in Aussie dollars to see what you've missed by not valuing your net wealth in gold ounces. That's your benchmark, gold ounces, the safest benchmark, including with my silver. I will convert everything to gold ounces. How many gold ounces are you worth? That is your benchmark, guys. This whole video, if you take one thing from it, is go calculate your net worth in gold ounces. Hear me now. This is your job. What is your net worth in gold ounces? Every time the gold ounces climb, everything you're keeping not in gold ounces is devaluing. That's your Aussie dollar, your US dollar, your other things. Calculate in gold ounces, and be my guest and have a Bitcoin measure, Ethereum measure, and a silver measure as well, if you add it. But know your wealth in gold ounces, because that will stay your gold ounce wealth, even if you do nothing and you're worth 100 gold ounces. Next year, you'll still be worth 100 gold ounces. God knows what it will convert to in Australian dollars, South African rands, Turkish lira, and any of these other emergings. And I'm afraid to say, in time, Canadian dollars, euros, and US dollars. Even though the US dollar will have a final spike as people run from one currency to another, eventually they'll realize it's time they ran from fiats altogether. And that's when you talk about Bitcoin tokens, Bitcoin valuation, Ethereum valuation, silver ounce valuation, and gold ounce valuation. Know your 4 measures of your wealth. What are your 4 measures of your wealth? Know your gold ounce wealth, know your silver ounce wealth, know your Bitcoin wealth, and your Ethereum wealth, and have a strong sharing in those categories. I might not be hodling a bunch of Bitcoin because I'm preferring Ethereum at the moment. I might not be adding to gold ounces because I'm prepared to take the higher beta of silver on the basis that it's going to go higher. But if we have a down leg, my gold ounce valuation will drop with the silver ounces I'm buying if silver's falling faster. But I'm working on the basis that that will snap back. In other words, I'm a long-termer on that investment trade. That's an investment. That's a blue pot. It's cold as ice. It doesn't change, and I never sell it until we hit single digits gold-silver ratio. That's my rule. Or until they make it illegal. And then I'll go dark market to get my true valuation for what the guys are selling for. So we are changing the scope for potential inflation. There's, apart from the know your valuation in terms of those 4 benchmarks I've given you, the other key point that I'm making in this video and recording that I really want you to understand is that by directly bypassing the banks and the intermediaries who were short-circuiting the money to their pals and the megacorps and blocking their own holes in their balance sheets, for which your champagne glass at the bottom of the castle never got a drop, you are now getting people, retail men in the street, often who make poor financial decisions, that's why they're at the bottom of the pyramid, get financial money and they have largesse and straight away they want to spend it. So I know of 1 or 2 people who've been receiving these checks and saying how great it is, and the first thing they want to do is they want to buy a new car. They want to look cooler, show social status, show success, and they're buying a depreciating asset. And during that same moment, new cars are spiking because production was held back. Second hands have actually having an increase in value to beyond some legacy new car prices, and the new car prices are coming in higher up. Terrible idea to buy a depreciating asset at the key supply constriction point where it has an artificially high price. But they will make that decision because they want social proof, they want ego, they want feel-good factor, they want, who knows, lifestyle, and they want to boost their endorphin-denied brain, their dopamine-denied COVID-19 depression. They want to spoil themselves because life is hard. The best way to spoil yourself because life's been hard recently is to buy a couple of gold ounces, silver ounces, Bitcoins, and Ethereums. And other cryptos can and will do well. Other precious metals can and will do well. Anything that is not proliferated, that is a known monetary asset. And I would suggest having a mix of all 4 and others. But that's a deeper discussion of portfolio theory that I'm not going to enter into today. But the key aspect in the US is shortage of supply, increase of temporary nature demand until new stimulus is passed. And the new stimulus will come, but they might wait a while. So they're going to do this fake red versus blue, no postal voting according to the Republicans, and Democrats wanting postal ballots. Who's going to steal the election types games? Otherwise, we won't agree the stimulus. Therefore, the people must suffer because we want to steal temporary power to be the implementers of our puppet masters for the next 4 years. So you're going to be at the arse end of that game, but new stimulus will come. And it is another key point, the gatewaying of UBI. UBI is here. Being paid for sitting at home is UBI. Just because they haven't called it UBI doesn't mean it's not UBI. Universal basic income is being paid for just being a dude or a gal. Merry Christmas. You're born and you're still alive. Here's a bit of money. Anything you receive from government, and you can go, but COVID-19 relief, COVID-19. It's a scam. It's a pandemic. They did it to get you reliant on state until you wind down your business, lose your independence, and become, I'll just take the state money. You work less. You get more welfare state orientated. You're more likely to vote socialist, democratic, and look positively on this Marxism that they're bringing to you. And then they'll start implementing criteria for you to continue to receive your drugs that you now rely on. You will have lost touch with your day-to-day business where you added value, sold something useful that somebody wanted to buy, in whatever case, whether it's a restaurant, coffee shop, second-hand clothes store, you name it. Whatever that business was, you've kind of wound it down a little bit, or you've barely kept an oar in. It's more of a hobby now, and it's just extra pocket money on your UBI. Boom, they now say, you will take the vaccine, you will take your passport or your chip, or we are ceasing UBI payments. They won't call them UBI, they'll call them your COVID-19 pandemic democratic support money, whatever scam name they give it, it's UBI. It's the gateway bridge to the eventual admittance that you are receiving UBI. If you allow that to happen and you do not maintain your independence, you will do exactly as the government tells you, or you will have all future income tapered away from you, and you will then be laid to waste at their mercy. You will go hungry on the streets. You will take anything they give you, and you will be lining up. You will take your vaccine. You will take your chip. You will take everything they goddamn tell you to take, because you need your tokens that they've just printed up to distribute to you, that they're distributing to all the other sheep. And I'm here to tell you, the minute you allow yourself to become totally reliant in any form on the government lusses that they are throwing your way, and in Africa we call it, here's a luss, it's a freebie. The minute you allow yourself and you start counting it in your budget and planned income, and you start living out of that income instead of seeing it as sheer bonus that should be going almost universally into gold and silver ounces, that's how you punish them for their proliferation. You turn that fiat that they are creating proliferation into hard money that can't be proliferated. That is how you punish them. And I've told you the 4 benchmarks. Go calculate your net worth. So here's what's going to happen. That CPI number is eventually going to start climbing as a result of that supply shortage, the price increases, and everyone flush with government cash. This is not positive economic growth. This is money proliferation, where the money is being devalued and everybody feels temporarily flush and then becomes reliant thereupon. This is your great game. And that is going to drive inflation even at that CPI level with the fake stats that they have. And in your shadow stats, as per Regan's 82 measure, will absolutely push up immensely. And long run, that's going to see more money go into gold and silver. More money from the smart people like me buying gold and silver. Because I am stacking like no tomorrows. Every red penny extra I have is going stacked into gold and silver. And I'm demanding it physically, as well as putting it in reserved bars that cannot be hypothecated online through Bullion Vault. The Bullion Vault links below. Use them if you're getting value from this channel. You get the full same benefits. There's no loss to you. The affiliates comes out of their marketing, and I appreciate it if you utilize it. If you don't want to, find another provider. I've checked into them. It's reserved. I can go hold that bar. It's mine, and I can pay and take it. If it's silver, you'll have VAT to pay. If it's gold, you take it. It's paid for entirely. So I can demand it, and I can change the vaulting from anywhere in the world that I want. Currently Singapore. All done on Bullion Vault below. Grab it, use it. What's your gold ounce worth? Count it in gold ounces on that site. And if you, every now and then you get to critical levels, reserve a bar. And if you want that bar collected, go and pay the cost that it requires and collect it. And it can be done. Okay? And that should give you confidence. And order physically. But physically is costing quite a bit more to get your hands on the stuff. But do it. Do it. Do it. Your gold, silver ounces matter. And the more we do that, by the way, silver as an industrial use, we're pushing jewelry prices up. We're pushing solar panel prices up. 5 kilos a Tesla is the number I've been given of silver for conducting and all the batteries and everything that goes in there. You're pushing up your Tesla prices. What do you think going from 11.75 to just about 30 at the run-up is to the cost of Teslas? It's got to be taken into account. And when it has its pullback and it finishes its pullback, let's say it goes back to 22, 23, and it starts its next run and goes to 50. By the way, Dave Morgan, you should check his channel out as well, done a deflator video. I don't know if he saw mine, but he seems to have done a video. He says $50 silver of 1980, the $50 silver of 1980 is worth $600 today. That's what silver should be today if it was at the same level height of them, which ties very much into our 3 digits call. And actually, if we have the super spike that I'm expecting and the super gold silver ratio swing that I'm expecting, will actually lead to a 4 digits. If you're at 600, if you were at 600 in today's dollars. So in actual fact, the precious metals bull market has not yet properly begun yet. You stop anyone who has a portfolio of equities and ask them how much bullion insurance do they hold. None. None. People that are trading Apple and Amazon, all these share traders, how many bullion ounces do you hold in your name, either physically at home or in a reserved bar that cannot be hypothecated in a site like Bullion Vault? They'll tell you 0. Most of them will tell you 0. Guess what? Buffett just dumped most of his banks, except for Bank of America, and just bought Barrick. Read into the history of Barrick, by the way, and the previous CEO who died in 9/11. Fascinating, and more stories. So it's probably real cookery, but it's the biggest gold miner, controlling the biggest gold ounces, one of the biggest. Buffett just bought an absolute swamp in there. And he's late. He's late. We gave him the bull call long ago. If he subbed to this bull channel, he would have got the bull call on gold at $12.95. $12.95 on a falling wedge for a future upside. Now he's sitting at 2,000. He missed out. He missed out on that. Better part of 35% plus run. But he's getting in now. I say getting in now, that's retrospective. He's been getting in the last quarter or two, and now he's in. So he's not voting for America anymore. He's not voting for the dollar anymore. He's getting out of banks, guys. The branch network is being sold in America all over the place. The banks are going to be sacrificed. I talk about it when I was interviewed with Nugget about the overarching lizard that is the central banking cartel, their intermediaries, the retail banks, and then how the money gets to you. One of the sacrificial elements in the change of the economy is probably going to be branch network retail banking. The lizard is going to drop its tail to distract you, and branch network banking will die. They're trying to sell those properties. They're trying to get out of it. You're going to have 1 or 2 super hubs if you have to go in and speak to people. The rest of it's going to be online, tokenized, blockchain, 2FA, call centers. Branch network banking for retail people is going to die. And they're going to sacrifice that. And the central bankers will sacrifice that and say, see, we've punished those banks you hate. They're out of existence. They didn't serve the people. And they're going to make you think that you've got a major scalp. And you're going to be all looking at this little lizard tail still twitching with a little drop of blood at the end of it. And the lizard is growing its new tail already. And it's going to be in the killing of cash. And that's how they'll justify branch network death. We can't have cash anymore. We're not doing branch network. We can't do the handling and the passing around and driving around and the counting machines and people to receive your cash. You know, exceptional cases only at one of our super hubs. You have to make an appointment if you still have cash. Part of killing cash, because cash spreads COVID-19. Cash spreads COVID-19. Your card doesn't. It's got super Rona spray on it. No COVID spreading. Passing that card backwards and forward, hitting all those pin buttons that you hit. No chance of spreading a virus. But cash It's as sticky as shit to your shoe, man, for Corona. It just loves cash. It just cuddles its way in there. Anyway, that part aside, it's all what's going down. So, inflation, even in the bullshit stats, much bigger inflation in the shadow stats, according to the 1982 Reaganomics calculation, a sign of inflation, but it will quickly fall back if the two puppets, blue and red, decide to have a fake Ponzi fight between them and delay the next printing of money. During that period, if they delay the next printing of money, the dollar might firm up. If they rush the next printing of money, you can expect the dollar again to ease a little bit, but maybe it rallies first. Maybe it creates that continuation pattern. Maybe it continues to sell off and runs that low that we thought may give us a continuation pattern. We know our levels. The idea is invalidated at that low. I think it's around 88 Dixie value, and then it's a topping out and a turning around before a bigger cycle turn up. But this is what's coming. I want you to know it, and you have homework to do today. What is my gold ounce net worth? Take all your debt out of what your positive balances are and buy gold ounces with what's left. At the current market, that's your gold ounce net worth. If it's not in gold, it's going to drop as gold moves up. If it's not in silver, it's going to drop in silver ounces. If it's not in Bitcoin or Ethereum, even more, because I'm more bullish Ethereum at the moment, your Ethereum net worth. Know your Ethereum net worth, know your gold and silver ounce net worth, and you may as well know your BTC net worth. And watch it adjust and look to build that net worth. Everything else is a monkey on a greased pole. And they play their Ponzi game of proliferation, and it's going to goose their stock markets on an ongoing basis as long as they continue to proliferate. And they will proliferate like never, ever, ever before. So have a mix of physical bullion and non-hypothecated reserved bullion bars bought through Bullion Vault. And as soon as you get to a certain size, you can go reserve a bar, and you get a serial number, and that is your bar, and it may not be sold to anybody else. Okay, guys, that's it. That's it from me, and this is a big, big change. The money getting to the bottom of the pyramid is going to see consumption. People are going to start using it to buy food. They're going to buy everyday items and also toys to cheer themselves up. And it's all going to be at that level. And it's going to probably goose Amazon, because the silly fools will all support Amazon and do it instead of independent retailers. But you can expect those stocks to push higher. But at least all the money isn't being loaned for stock buybacks to the megacorps on quite the same scale. That's one thing that's changed, and some of that money is finding it to the grassroots, but the net effect is inflation. By all measures, it already exists by honest measures, but it's hidden by their fake measures. We'll see inflation, but it won't stay inflationary unless they reissue their next, because these are going to be inflation, deflation, and it's going to be based on the proliferation of stimulus. Okay, and those stimulus packages are going to be super large. Bye for now. I'm repeating myself. Subscribe and like. Share this channel so that we have a sufficient numbers that it justifies more regular input. Because I've got lots to tell you, but at the same time, we've got to divide our activities for where it's getting the most recognition. Bye for now, guys. Thank you for supporting.